Good morning and welcome to today's webcast, Unlock a More Efficient Approach to PCAOB Audit Success. Before we get started, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And before we get started, I wanted to share our big news that Moss Adams and Baker Tilly have joined forces to redefine accounting, tax, and advisory services for the middle market. It's really exciting, and you could read more about it on our website via the link in the slide deck and handouts widget. And with that, I will turn it over to John to kick us off.
Thank you, Emily. I'm John Donohue and a principal here at Baker Tilly. As Emily mentioned last week, Baker Tilly and Moss Adams came together to form a new firm focused on the middle market. At Moss Adams, I led the firm's SEC practice and have assembled an all-star cast of Baker Tilly professionals today, all of whom were in the legacy Moss Adams SEC practice, to join me talking about PCAOB audits and a few tips and tricks. I'll do some quick introductions here and then we'll get on to the content. Just going through the slides as presented, Weston Nelson is a principal in IT assurance, located in the Pacific Northwest and focused on supporting PCAOB audits across the firm. Before he was at Baker Tilly, Weston was a global financial compliance director at a Fortune 100 firm and also worked at a Big 4 firm. Patrick is a principal in our Southern California offices located in Irvine. He's been a principal since 2022, works in the SEC practice, and is focused on manufacturers, industrials, and consumer products. Jeremy's been a principal since 2020, is located in our Seattle office and is focused on life sciences, technology, and serving public companies generally across industries. And last but not least, Thomas Starr, a senior manager in our national office, focused on PCAOB inspections, audit quality. He previously worked at a Big 4 firm's international German affiliate and also supports serving clients on integrated audits. So today is meant to be kind of a practical discussion on a number of sort of hot topics there. I'll give it a brief overview, and then we'll get through kind of the 5 short but kind of meant to be practical, meaningful sort of hot topics and issues we've been seeing on our side. Please do ask questions along the way. We'll try and interject things where it makes sense or cover some Q&A at the end. To the extent we don't get to your question, we will either reply via email, as Emily's video alluded to, or it's a great opportunity to reach out to one of your Baker Tilly professionals, one of us on the call, or one of your local professionals as well. So from a quick overview standpoint, sort of why are we here and kind of what are we doing? And I'd say really, we continue to be at a bit of an intersection point with PCAOB audits. As many of you have heard or experienced or read in some of the PCAOB comments, PCAOB has been pushing hard on audit quality the past 5+ years. And many of these items are going beyond just our work as auditors and really extending into a company's or a client's, systems, processes, controls, and really how they execute what they do for us to then audit it. So the themes we've kind of selected today are kind of key themes that have come up in PCAOB inspections, but have a root cause or a connection back to the company's systems and processes. So from that standpoint, it really is trying to educate you on how you as companies and clients can help get your systems and processes and controls to a level to sort of ease that audit process. I think another key point to highlight here is kind of the regulatory environment with which we're in. And really the SEC has allowed the PCAOB to use its inspection powers to kind of drive these improvements at public companies. And one can debate whether or not that's an effective regulatory model or if that's the preferred approach. But without a doubt, the SEC is supportive of what the PCAOB has been doing. We're not going to get into the potential future of the PCAOB and any potential legislation before Congress today, but I think it's fair to say the SEC has been very supportive of this. And so, again, from a regulatory standpoint, the SEC is allowing the PCAOB and the firms to help drive public company changes in public companies around accounting processes, controls, policies, et cetera. And lastly, companies want to understand how these audits can become more efficient and more cost effective. There's been a lot of pressure the last 4 or 5 years, whether it was some staffing challenges during COVID, the regulatory environment with the PCAOB, et cetera. Companies really want, I think, practical, understandable guidance on how can the audit process be more efficient, both for their internal folks, for their internal audit costs, and their external audit costs. And so we're here today to kind of try and bring these concepts together. And we're really doing that with education. And so understanding that if this is the regulatory circumstance we find ourselves in the environment we're in, the best thing we can do for our clients and our potential future clients is to help educate you, to sort of show you, hey, this is where we need you to be for our audit process to be as efficient and as effective as possible. I think there's benefits to you as well. You'll get some improved efficiency, hopefully, in how you execute, hopefully some better controls and some better processes and policies coming out of it, but really an opportunity there to take a look at it. This is also the last of sort of a 3-part series we've done on this topic. Weston and I and some of our other Baker Tilly professionals did 2 webcasts last year, more focused on the IT side, as that's also been a common area of focus under the PCAOB inspection process. And so if you haven't seen those last year, I'd really encourage you to look at those. Those are other areas to get efficiency on the IT part of an integrated audit in particular, and really an opportunity to continue what we're discussing today, even though Weston will talk about IT controls today as well. So with that, I'm going to turn it over to Patrick to go through our first topic on management review controls.
All right, thank you, John. Hello, everyone. I am a principal here at Baker Tilly, and I've spent the bulk of my career working on integrated audits, everything from pre-revenue clients to Fortune 500s as well. What I'm going to talk through today is not necessarily new, just concepts that have evolved over time, and hopefully it will be some information you find useful as you work as control owners to be more efficient and effective in your 2025 audits. All right, so the first topic we'll talk about is management review controls, or MRCs. Why are we continuing to talk about these? Well, oftentimes, these are the most critical control points at a company and most likely to have control documentation issues. These are the 5 to 10 controls at your company that typically relate to topics on the screen here. A good starting point is to think through your critical accounting policies in your 10K and the critical audit matters that your auditor had in their opinion. Examples can include such things as inventory reserve, allowance for credit losses, any sort of forecasted financial information used in a business combination or a 360 or 350 impairment calculation. Basically, these are the controls where considerable judgment, projections, estimation, and industry-specific knowledge are required. I'll spend the next few minutes talking through some key reminders to make you more effective. And our first topic here is attributes. Okay, at this point, most of us that have regular SOX exposure know that having a simple control like the CFO reviews the goodwill impairment analysis for reasonableness is just not appropriate. One of the easiest ways to make your SOX walkthroughs more efficient and get the auditors out of your office quicker is really distilling your key MRC controls down to specific attributes. In short, there should be an attribute for all key decision points within the control. Breaking down an MRC to multiple attributes really allows you to call out those specific review actions that most effectively address the risk that's being addressed by the control. For example, not all attributes of a control have the same risk profile. Even when we think about something as subjective as forecasted financial information, not all those forward-looking cash flows are the same. The first year of a forecast could oftentimes be something more objective, like committed backlog, and the long-term out years could simply be CPI increases. For many companies, those between years 2 through 5, are where the true risk estimation resides. If you follow that logic, you can focus your controls documentation and evidence retention on the risky portion of the control. You still have to address the other periods, but you can direct your energy to where it really is the most impactful. In the next example here on the screen, you can see how the incremental attributes identify where the risk is. In this example, attributes A and B are important IPE validation steps. Attribute B also links to a separate key MRC estimate, but we'll focus on attribute C here. As it relates to this specific control, the control owner should invest incremental time on evidencing how they got comfortable with qualitative exclusions to the usage detail. This also wouldn't be an SEC-focused webcast if we didn't touch multiple times on IPE. Addressing how management got comfortable with the completeness and accuracy of the underlying inputs that go into an MRC is often best addressed by way of a specific attribute that addresses each of the key underlying reports used in the analysis. In the second example, you can see that with attributes A and B. Moving on now to evidence. So we've talked about expanding your MRC attributes. Let's focus a little bit on how we can evidence the effective completion of a control. This can often be one of the more difficult components of documenting your MRCs, but we do have some suggestions to make this a little more effective. We all know at this point that sign-off is just not enough. As the risk increases, so does the depth and breadth of evidence that will be asked of you. Our advice is, when in doubt, retain those minutes, draft analyses, review notes, and so on. Talk to your audit team up front. Understand what the audit team deems most significant in the control and understand what sort of evidence they are looking for. I like to tell my clients, this is an open book test. I'll give you the answers up front and help guide you towards completion. Next up, document real time. For example, if there's a business combination or any other sort of one-off non-routine transaction, probably the best advice I can give is to document as you review as you go through the transaction. From my experience, being in the CFO's office at 11 p.m. the day before filing looking for 9-month-old emails is just not fun for anyone. If there's a meeting that really drives a key control, a meeting such as a 5-year forecast review, slow-moving inventory review, AR allowance, so on, either take some very detailed notes or consider recording the meeting or even having somebody on your team serve as the designated scribe. Comments and actions items are great evidence of review. I have found that meeting minutes, as well as a pre and post version of a key analysis, are great MRC evidence. Save draft versions with comments and track changes. It's helpful. It's also helpful when the evidence of review is substantive in nature and more than just formatting or grammar edits. This is errors are good. We oftentimes don't think of errors are good, but as it relates to documenting your controls, oftentimes the auditor may ask what errors or edits have been identified through the review process. Identifying those errors is just great evidence of a control operating effectively. Finally, we suggest having a system to evidence your validation of the completeness and accuracy of IPE being used in the control. That could be snips of reports, tick marks, cell comments, different highlights, so on. Final topic I will touch on for management review controls will be precision. Precision refers to the size of a misstatement the control is there to prevent or detect. When determining the level of precision, it can be helpful to first think about the errors and exceptions that the control is designed to detect. It's not just quantitative. It requires consideration of both qualitative and quantitative factors. Basically, those things that will cause the reviewer to perform additional procedures. For example, there could be a dollar amount that creates a follow-up action. There could also be a qualitative factor, such as a manual adjustment or items that are deemed unusual. For both the quantitative and qualitative precision, it is important that those thresholds are identified and documented. That's pretty straightforward from a quantitative standpoint. Typically, there could be a dollar amount or a percentage change, probably a little bit more difficult or more abstract as it relates to the qualitative factors. It's important to have documented what is usual. If the reviewer is looking for unusual items, then we should probably have documented what would constitute an unusual item. Finally, from an efficiency standpoint, much we talked about here for precision has been effectiveness, but efficiency, you may want to take a fresh look at what you have documented already for precision. Has it been years since you assigned quantitative and qualitative criteria? Has the business grown such that a higher quantitative threshold could be used? Or are there qualitative factors that truly don't warrant follow-up anymore? Perhaps there's an opportunity to refine your precision associated with that control. With that, I will toss it back to the team to continue the discussion.
Thanks, Patrick. And we'll do our first polling question today. So just how efficient is your audit process? If it's answer A, I hope you're an existing Baker Tilly audit client. That would be great. If your answer is D and you are not a Baker Tilly audit client, I hope you sent the RFP our way. And if you are an audit client and you send out the RFPs, call me if you want to chat about what our team could be doing better or how to make that audit as efficient as possible. Patrick, maybe just one thing while we're waiting for people to come in. I think you mentioned business combinations a few times, and I know a lot of times we see public companies, rightly outsource, some of that valuation work, to other third-party specialists, or maybe they're getting information from their investment bankers into transactions to help with a peer group or anything like that. And I think I don't know if you have any thoughts on this, but I know that's been an area in the past where sometimes there's other experts or other people that are, making judgments. And I think management, by using their work and sort of relying on that work, they're kind of having to sort of incorporate that judgment into their framework and their MRC, even though maybe that isn't sort of obvious there. So I don't know if you've seen that or have any good tips there, but I think just, a great reminder for business combinations is just how to think about, other people and that judgment and sort of how you incorporate that into your MRC process.
Yeah, most definitely. When management does engage a specialist, it's important to remember that the specialist is essentially an extension of management. So it's not a delegation of responsibility. It's you take the outputs from that specialist, whether it be the peer company listing appropriate? Is the company specific risk factor, is that appropriate? So it's really documenting from start to finish how management owned and owned those assumptions and how they're appropriate for the company that's relevant for them.
Yeah, and for an integrated audit, we'll want to see a control that covers that. And then for a non-integrated audit, substantively, we got to be able to get there on how management got comfortable with that. So either way, it's a good thing to think about on the front end. We're at 90 attendees having submitted a poll. So if you're in that last 10%, please get your poll in. We're going to close the poll shortly.
Patrick, one thing you said, and in the spirit of it being an open book test, I think were your words. You mentioned that errors are good. And when I think about management review controls or really any detective controls, I think of them as detect and correct, right? The two pieces working together. And I think a lot of times we focus our energy as auditors, management focuses its energy heavily on the detect portion and doesn't think about the evidence of the correct piece. And so in the spirit of it being, an open book test, I think if for every control like that, you had attribute 1, CNA, attribute 2, the detect elements, attribute 3, the correct elements, then I think that would go a long way.
Exactly. So if there's a process to review, and the reviewer has suggestions or edits or changes, seeing those reflected in subsequent versions of the documentation or the analysis is a home run from a documentation standpoint.
So our poll looks like folks are doing pretty well. Only 1.7% of you sent out RFPs last week, so most of you are doing okay out there on the audit side. But hopefully, particularly in the pretty good and the not terrible, could be better. We've got some ideas today that can help further improve that and get you to the very dialed in stage. So with that, speaking of getting it dialed in, we'll turn it over to Weston and talking about automated controls and some IT topics.
Thanks, John. Good morning, everyone. Good afternoon. Excited to be here. One of the things in the spirit of continuing the conversation around identifying best practices as well as creating opportunities for you all is to talk about automated controls. While technically an automated control has a technical component to it, it really is a business process control. And we'll get into some details here in a minute, but let's just define what an automated control is. Typically, an automated control is a process or an operation that is typically owned by the application or device. What you'll see in some cases is this may be inherent logic within a code. It might also be configuration that might need or require setting within the system, or it could be based on security parameters and settings where someone has the ability to go in and make a change. So why are we talking about automated controls? Well, this is one area where you can create efficiency within the audit. And again, this is also going back and really taking a look at it. This is purely from an efficiency standpoint. So when I look at on the right-hand side of the slides here, automated controls do prevent considerable value. They are oftentimes more effective than a detective control. And this is largely in part because of the manual nature of a control and the potential for human error. So when we talk about the automated control, it isn't that an automated control is better than a manual control. We're speaking of this purely from an efficiency standpoint. So let's go into a few examples of an automated control. Here's a list that you can look at on your own time, but largely in part, the two most prominent automated controls here that you'll be familiar with are workflow or validation check. A validation check can be like your three-way match. It can be tolerance levels that are set. And those validation checks can also be in a combination with workflow, where an individual is signing off on a certain threshold, and then a higher threshold requires that to be sent to someone else. So these are just various automated controls that you can have, or examples of automated controls to consider when you're going through. Now, to step back, let's talk about a little bit of the benefits. Why are we talking about this today? When you think about automated controls, they are more effective in the sense that they are preventative controls that are routinely operating the same every single time. There isn't the air for human intervention. There isn't the potential for something to miss. Once you set that automated control, it will operate consistently as intended or the way it has been configured. So that's the benefit of really going through these. Ultimately, too, in this conversation, we'll get to the cost side of this. They can be more cost effective. We'll talk about this when we get into the details, but there is an opportunity to create efficiencies when you're within the audit to really maximize the time it takes for you to get through your own internal testing, but also, as kind of Patrick mentioned, how efficient you can get your external auditor through the process as well. Continuing on, let's really talk and take a minute to step back and talk about the design of an automated control. The design of an automated control is the most fundamental part in really ensuring that you're getting the most efficiency from your internal control process. This requires some really clear documentation and understanding of what automated functions reside within the system. Typically, these will always be aligned with financial statement assertions. And as I mentioned earlier, there are a variety of different ways, and understanding whether your automated control is inherent, configurable, or programmable through security settings is important, because that will drive that will drive the testing of operating effectiveness. When you look at the nature of the automated control, it is really important to understand that this is a business process control first and foremost. There is a technology component to it, so it's important that you really understand the business process, you really understand the controls that are around the automated control, and you also understand the technology. This is one area where we encourage that you really bring someone who understands the application well and someone who understands the business well together when considering the design of an automated control. Now let's talk about, once we've got the design in place, let's talk about testing the automated control. Going back to that statement I made earlier, depending on the nature of the automated control, whether it's inherent, configurable, or it's related to security, is going to drive your testing. If it's an inherent control, this is where you may need to spend some time getting into the more technical side of the application and understanding the logic of the code and the application and how it works. If it's configurable, this is where you need to spend some time focusing on the nature of the configuration. And this is one area that can be a little tricky if you're not careful. So be mindful, if you're running a large tier 1 ERP like SAP, you can configure different automated controls to operate differently by company. It can be done by company, company code, distribution center, however you have your environment set up. Just be mindful that you might need to look at multiple layers depending on that setup. Once you've defined the configuration or how you're going to go about testing it, then it's a matter of just executing and verifying that the automated control functions as intended. This is your positive test. Really going through a process to verify that as you've described it, that's how the system's performing. Oftentimes you'll too hear that taking an automated control and leveraging that is really only a test of one. Technically not totally accurate, because you do need to test the negative side of this. So there may be two components that you have to consider. It's both the positive and negative. And when we talk about negative testing, this is really trying to confirm. I often refer to it as trying to break the system. So if it's intended to ensure that it goes to the next person at a certain threshold, then you want to see if you could break that and take it, basically ignoring whether that will go on to the next threshold or not. So just be mindful when you do set up your automated control testing that you're thinking about it from both a positive and a negative test. A few more things to consider, and I won't go into details here, but I did outline an example for you that you can go back and refer to as a case, as a way to set up an automated control test. This is taking into consideration a three-way match using more of a D365 environment. I want to continue on really with the efficiency side of this in the conversation. This is where we really get into understanding the nature of the testing. One thing that you need to be mindful of as you're setting up your testing is making sure that you're testing wherever possible in production. This is a great way to really help facilitate the efficiency in getting through the test, both from an internal management point of view, but also from an external audit point of view. All testing, where possible, should be completed in production. You want to retain evidence of that. And to the extent that you can't test something in production, then this is where you want to be mindful that you're capturing in a test environment how often that test environment is refreshed with production data, so that you've got a close parallel in what is verified in test is a reflection of production. So those are some items just to be mindful of as you're going through, thinking about testing, looking at it from the auditor's point of view and how you can more efficiently get through that process. And then lastly, the cost savings. the cost savings truly, when you think about an automated control, comes from the ability of being able to benchmark. And that benchmark, let's take, for example, in year one, you may need to spend some additional time to stand that up, but subsequent years, you will be able to take a benchmarking approach, and that can be leveraged through these points of consideration, really making sure that that logic hasn't changed, the program hasn't changed, the security settings haven't changed. And if you can provide that basis that the environment is still static from the previous year, that gives you the opportunity to create that benchmarking over an automated control. And with that, I will turn it back to John for our polling question.
Thanks, Weston. And we'll start with a real basic kind of A or B polling question here. Is your internal audit in-house or outsourced? And Weston, while we have the people, the audience, so to answering that question, a couple questions came in on your topic. One, I think I can answer pretty quickly. Are automated controls the same as IT controls? And I think the short answer is probably sort of, but they are different things. You know, a lot of times when we talk about IT controls, we're talking about IT general controls and the 4 domains of IT general controls that are part of what we call effective ITGCs. And those get around operations, security, access, change management. And I think for more information on those, I'd encourage you to watch the 2 webinars that Weston and I and others did last year, because we really covered those ITGC elements in more detail during those webinars. I think Weston's comments on automated controls here are really trying to focus on where can an IT control replace a business process control. So these are things that would have to have some sort of manual control if an IT control didn't exist. And I think that's where we're trying to differentiate. You know, yes, you do need effective and functioning IT general controls for ITACs to have a foundation to exist and so to be effective, but they are not the same thing. And really, IT automated controls generally would replace or supplement a business process control. So we have 87% of our audience responded, so we could get another 70 or so people could join. That'd be great. But yeah, Weston or others, any comments to that or any reaction?
Yeah, just I would say you spot on in the sense of an automated control is a business process control with a more technical component, right? It's going to map one-to-one to your financial statement assertions, where the IT general controls are really addressing change management, security, operations. So they're slightly different. That being said, there is a correlation. You do need to have effective IT general controls to have effective business process automated controls. And so there is a foundation where you need to have the IT general controls operating effectively, especially around security and change management, to capitalize that efficiency and leverage the automated control.
And Weston, if folks in the audience are, listening and saying, I don't know if we have too many automated controls. We mostly have, IT-dependent manual controls, but they have a sophisticated ERP system. Where might they start? Because, my experience is a lot of times many of these controls exist, but may not be called out formally in the control structure or tested as such.
No, that's exactly it. And that's where I would go back to. Really, it comes down to understanding the design. It really does require you to do a walkthrough and really with both a business process person and someone who's knowledgeable of the application. Because to your point, Jeremy, there's a lot of these that probably already exist within the system that are being duplicated by manually addressing the same thing. So in that scenario, you can really leverage that, what is a manual control today, to be an automated control and test it as we described here today.
And I would say, even though Weston's primary role is spending time supporting, kind of our external audit client engagements, we can also help companies if they want to help identify, if they've got one of these tier one ERPs or other systems, and they want to help identify those automated controls and help make their environments more efficient. Definitely reach out to us. That's something we can put you in touch with someone on our team that can help you kind of work through that process and really optimize those controls if you're looking to take more advantage of those IT automated controls. With that, I'm going to turn it over to Jeremy for a real quick reminder on walkthroughs, and then we'll keep going.
Yeah, thanks, John. So as we think about the walkthrough phase, just a couple of reminders on what exactly we're trying to do in this phase. A couple of things. One is gain an understanding of a process, and that really has to start from initiation all the way through recording in the financial statement. So you may hear the phrase cradle to grave, just really understanding how data flows through a process all the way from initiation through recording in the financial statements. And so if you take a process like order to cash, we want to understand what is the very first thing that comes into the business from a customer that says, hey, I want to, enter into a transaction. The first control that may happen could be later on in that path, but we really do, when we're gaining that understanding, need to start with how these transactions are initiated. So a couple of best practices, oftentimes if you're doing a recurring integrated audit, you should have, prior year narratives, flowcharts, walkthroughs to leverage in that case. But we're going to take a current year transaction, and then we're going to try to follow it through, from initiation all the way through recording in the financial statements. So if external auditors can make those selections before they gather a group together to meet to understand the process, your external auditor can take that information, take all the PBCs that have been provided, try to work through as much of the documentation as they can prior to engaging with the company and sort of taking the company's time to discuss it, and maybe send a set of questions out. Here's what we don't quite understand in what you provided this year that may be a little bit different or something unique to that transaction. And that way, when you do gather all the folks that need to be at the meeting together to talk about it, you're talking about a subset of the questions and really keeping that meeting focused. The other best practice would be just to make sure the completeness and accuracy of data being utilized throughout the process is addressed. We talked a lot about and we'll talk some more about the information produced by the entity or IPE. And then making sure that in addition to the business process owners and the business control owners are present in that walkthrough meeting, also including IT where appropriate. Seen some inefficiencies where the business process team cannot answer questions about where data is coming from, or they just go out to a share folder and grab it, but they're not sure what's happening on the back end to provide that data to the business process owner, and that's where we need IT to help fill in the gaps there. Patrick talked a lot about, for management review controls, what are the attributes? We want to leave the walkthrough phase understanding exactly, what is required, what level of precision, what type of documentation can we expect, especially around those critical elements around the data being used. Couple of things to avoid that we just see introduce some inefficiencies in the process is just talking, spending too much time talking about, the process versus control, how some of the minor elements of the process work and not focusing on really those activities that are preventing or detecting material misstatements. And then, oftentimes we'll try to confirm our understanding of a process and a process owner will jump in and say, well, in very limited cases, this other thing happens. And, that could be a surprise to the audit team. So we start asking questions about a really unique circumstance when that may be, less than 5% of the transactions go through that. And so try not to get bogged down in kind of the one-off bespoke, unique set of circumstances and really focus on, what are most of the transactions flowing through the process looking like. And again, having a really effective walkthrough process starts with preparation, right? So making those selections early, trying to walk through as much of it as you can, coming prepared to a meeting with a group, sending those questions in advance, and really trying to keep those meetings focused. So with that, I'll turn it back over to John. We have another polling question.
Thank you, Jeremy. Yeah, and that's so challenging, right? Because in the same sense, we tell clients like, hey, we want to see from cradle to grave, from initiation to, it showing up in the financial statements. But if we're also saying, well, don't get too far off the path either, right? In terms of going down every little tangent or rabbit hole there potentially. So, yeah, you could try and find that right balance. And hopefully, like Jeremy said, if you've got an external audit team you've worked with a few times, you get a cadence there and there's some history you can leverage, but really that requirement to make sure we understand, the initiation to being recognized in the financial statements is critically important. All right, we've got 62 folks have hit submit on the poll. Would love to get that closer to 80 or 90%. Hopefully everyone's still with us here. I think next topic up will be IPE. So I think this initial question here is just to get a sense of sort of what's your baseline knowledge here, and then we'll turn it over to Thomas to talk more about IPE. So we're at 80%. I'm just going to give it another about 5 seconds, and then we'll keep going here. All right. Well, Thomas, it looks like 26 feel like it's very strong alignment between IPE and between internal and the external auditors, but for the others, maybe there's still some room to go. So we'll let you take it away.
Perfect. Thanks, John. And yeah, as you'll have seen from the presentation so far, obviously a household favorite here. The topic of IPE, I think it made a cameo in both Patrick and Jeremy's sections, probably will again before we're through here at the top of the hour. But do think it's an important topic to spend some time talking about. But I think before we get too far into the discussion, I think it's important to level set and make sure that we all have a common understanding of what we're really talking about when we say IPE. You might hear other terms thrown around, just data, generally speaking. You might hear people talking about key reports. Really, we're all talking about the same thing. We're talking about your internal information that you're using to do something, and that's part of the audit. And so the focus today is really going to be on IPE in the context of management's controls. I think that that's an area where there's probably the most potential in terms of collaboration and opportunity for alignment as we move through the audit process. So that's the focus of the IPE discussion here today. You might be asking yourself, why do we care? It's no secret that this is an area of regulator attention profession-wide. It's a focus area. The expectations, as you've probably experienced, have increased year over year. And so setting that, I guess, economic kind of context aside, I think there's practical reasons why it's important, right? If you think about information that you're using to perform an activity, whether it be a control or anything else, that activity or that outcome is only as good as the information that goes into it, right? So a classic garbage in, garbage out, to use technical terms, type of scenario. And so whenever you're using information to do an activity as part of a control, we care about the reliability of that information. For internal information, when we talk about reliability, we're talking really about two things, kind of the two ways that we measure it: completeness and accuracy. So is everything there, and is the stuff that's there correct? I think that in my experience, talking both internally, in the firm and with clients, there can be a tendency to focus on the form of the IPE rather than the substance. And so I do want to maybe just take a step back and just acknowledge that IPE can come in a variety of forms. There's 6 examples there on the slide. Those are ones that you're probably all very familiar with, but by no means is that an exhaustive list. And so the real key consideration that I think would be a good takeaway is this information that comes from an internal source that I'm using to do something, right? And if it meets that definition, then effectively it's IPE and we care about it. I also included a couple examples at the bottom there, third-party service organizations, as well as information that gets sent to external specialists. Those can be often overlooked just due to the nature of where they come from or where they go to. We might not think about it as internal information, but it really is in scope. Maybe just stepping back real quick, just practically speaking, I think as you're kind of looking at the calendar now, it's June, so you still have some good runway for the calendar year ends. I think now is a good time to think about identifying the IPE in the context of your audit. So if you're on an integrated audit obviously the answer is easy and the list is long, right? It's basically everything that's associated with a control. But if you're a client out there that's on a non-integrated audit, then I would prioritize those areas where your auditor is using a control reliance approach. Those are going to be the areas where the IPE is going to be in scope as it relates to the audit from a control perspective. So really spend the next month, 2 months, when you have time here before it gets too busy, identifying that population, because that's going to set you up for success as you move forward to testing. So just in terms of how to test, I think that a great philosopher once said, "A picture is worth 1,000 words." And there's a diagram at the top of the screen here. I think it does depict a fairly simple scenario. I think if Weston was in charge of drawing this, you might see a few more shapes, a few more lines, but I think it still illustrates kind of the intent of what we're trying to communicate here, which is you have your IPE on the far right side. That IPE is the information that we've identified, based on the discussion that we just had. That's coming from or being derived in some manner from a system. And then on the left side there, you've got this interaction between users and the systems as transactions are initiated, recorded, processed, and the like. And so if you think about that as the critical path, right, the data flow kind of from left to right, the risks listed down in the bullets there, those are the areas where along that critical path, that data can be rendered incomplete or inaccurate in some manner. So those would be the risks that we would generally see. If you look at the first two, those are really looking at just the integrity of the data, right, in the system. So that's really the foundation of what ultimately is going to become the IPE. I think the good news here is that the nature of the controls there, those are your bread and butter business process controls for the most part, how you initiate, process, transact kind of as you're running your business. So I wouldn't expect that there's anything groundbreaking here and anything that you're not doing, but I do think it's important to at least be mindful of what controls address those risks as it relates to each piece of IPE, because those are going to be the areas, or the controls rather, that we're going to be focused on as we're thinking about the integrity of the data in the system. And then as you move towards risk 3 and 4 there, that's really the part of the process where the information is being moved from the system into the IPE. And so those are probably the more direct, I'll say with air quotes, IPE related controls that you'll want to think about. If you're taking notes, I would put a star or highlight risk 3.1 and 4. Those are two areas where we would generally expect to see a manual activity taking place if you have IPE that's parameter driven, or in the case of risk 4, if it gets exported into a modifiable end user computing tool, for example, like Excel, which is commonly the case. So if you're in a management function, be thinking about how you can integrate those into your process. It's not necessarily hard. I think Patrick touched on a few ways: screenshots, tick marks, notations. It just takes that kind of intentionality, right, in terms of making it part of your process. And then if you're in an internal audit function, just get those right in the testing work paper, as soon as possible as a testing attribute, and then you'll be set up, as you move through the testing at a later date. If you take those two kind of risk components out, you're left with risk 1, 2, and 3.2. I think that those are all good areas where you can think about some of the stuff that Weston was talking about in terms of potential automation, whether that's within your business process controls as it relates to risk 1 and 2, or in terms of testing the report logic. If you have ITGCs, right, you can test that report logic at a point in time, and then basically establish a baseline that you carry forward for a period of time, which could be multiple years in some cases. So hopefully that gives kind of a roadmap as you're thinking through your IPE approach for the upcoming year.
I think, Thomas, just to close out this section here as we transition to a polling question, I think it's just, it's clear that on every walkthrough, and Jeremy was talking about walkthroughs earlier, we're going to ask about data. and we're going to think about attributes related to data and around the completeness and accuracy of the data used in the control. And I think, these IPE best practices are, I'd say, a non-exhaustive list of the type of questions or the type of risks we're concerned about as we're doing those walkthroughs that Jeremy described. And really even go back to like the MRCs, or that Patrick was talking about earlier, and say like a business combination, you've got inputs into that valuation process or something else. How are you thinking about that data, even if it's not coming out of a system or you don't think about it as IPE as like a key report? It's still data and information being used in the operation of an estimate and then, needed in the controls. So how are you thinking about that from a company standpoint? And I think, again, these slides are available. Please download them and use them as a reference point as you're getting ready to do your walkthroughs this year. All right, we've got 3 slides of content left, so we're going to let this polling question go, and then we'll turn it over to Jeremy to sort of close us out, talking about effective use of internal audit. While folks are working through the polls here, and again, I don't see any submitted, so hopefully folks can see this and are starting to click through here. We did get a great question here on whether or not for current clients of either Moss Adams, so legacy Moss Adams or legacy Baker Tilly, should we expect significant changes in audit methodology? I would say no, not in the short term. I think there will be a process over time. Both firms had sort of independently started down a path of looking at kind of next generation audit platform tools. There's been a real push towards more cloud-based audit platforms and methodologies driven off of some of those newer technologies. Both firms kind of pre-combination had been starting to look at that. And we expect that process will come together and at some point in the future will integrate into a combined platform. But that's a bit of time off. So in the near term, we're not expecting any changes to methodology or systems, definitely through your 2025 calendar year audits and likely for a period beyond that. So, all right, Jeremy, we've got 74% of the attendees have submitted. So we're going to give it another about 3 seconds, and then I'm going to turn it over to you to talk about effective use of internal audit.
All right, thanks, John. So there's a couple of things to think about in terms of use of internal audit. Just wanted to ground everybody in the standard. Your external auditor will be looking at competency and objectivity in determining whether, to what extent or if they can rely on the work of others. Competency is pretty simple. What kind of experience do the folks that would be doing the work have? What kind of roles have they had? Education, those sorts of things. Objectivity is a little more unique in the sense that oftentimes internal audit functions report up through controllers or CFOs, and there's a big focus historically on providing direct lines of communication to those charged with governance. So does that internal audit group have a seat at audit committee meetings? Do they present to those charged with governance? Can they meet periodically with the audit committee chair to really demonstrate there's that objectivity there in addition to the competence piece? So assuming that's all in place, where do you start? Really need to understand kind of the scope and plan of that group that's doing the internal audit work and create some realistic expectations. Are they mostly focused on operational audits and don't do much in the way of business process or IT control testing? That won't lend itself well to reliance. How does their documentation look? Is it closer to the level of what an external auditor would expect? All the attributes covered, including IPE and completeness and accuracy of data and those sorts of things. To the extent the documentation would withstand the rigor of external inspection from PCAOB, then you're in a better spot to rely on the work of internal audit. And clearly there's an inverse relationship between kind of the risk of material misstatement, the degree of subjectivity, and the amount of reliance we can place. We mostly look for, routine cycles or controls to maybe pull in and rely on the work of others for those. And then just a note on milestones, I think most firms have gone to a milestone-based method where you sort of spread the work out throughout the year. Maybe in period 3, you're doing walkthroughs, and then move into tested controls. And if internal audit's calendar doesn't align with some of the milestones that your external auditor are looking to hit, that can also sort of affect, if and when your external auditor can rely on the work of internal audit. And then, if you are relying on an internal audit in a direct assist manner, you're sort of supervising, reviewing, and evaluating and testing the work that they're doing, just like they're an extension of your team. So just a reminder on how that works. So, what are some common areas? Usually internal audit will conduct risk assessments and understand the entity. You can certainly pull in those evaluations and leverage that. Maintaining narratives and flow charts, including changes to those items. Coordinating, we talked about those walkthrough meetings, getting everybody in the room that needs to be there. So just calendarizing all that can be an administrative burden. Some of the more typical things you'd expect, like testing those lower risk controls, like I talked about, potentially even doing some substantive testing, expenses or fixed assets, something more routine. On the IT side, similarly, IT general controls or testing key reports or other IPE. Any changes to a system? Is there a new application that's being brought into scope? Has internal audit looked at management's documentation around that? And then some maybe, less frequently utilized ones like maintaining lists of related party transactions or sensitive payment testing like officer and expenses or, payments made in certain, higher fraud risk countries. And then what are some keys to success? We talked about sharing of templates, that open book test approach. Each firm will have kind of their version of templates that they want you. So if you're going to, have internal audit do some work, they should be using the templates and all of the forms that your external auditor will want you to use. Making sure we're aligned on those control attributes that we talked about. Making sure that we understand the IPE and how that is getting tested and documented. And then just in terms of sampling, like each firm has their own methodologies in terms of, many times daily, weekly, monthly, quarterly, how many samples need to be tested in terms of a lower risk control or higher risk control. So just aligning on expectations around sampling. And then just in terms of avoiding duplication, if, external auditors are going to make a sample, even if they're not relying on internal audit or the company themselves for their own assessment could potentially, pull the same samples and do the same testing for their own company attestation for the 404A side. So just something to think about if for some reason you are, duplicating sample sets there. So with that, I know we're up against time. John, I think you're the last slide here to take us home.
Thanks, Jeremy. And I'm actually going to go back real quick just to, we didn't really get a chance to recap the polling results earlier to say what percentage are people using. And really my only takeaway of this is if you're in the I don't know camp at 26% there, it's worth a conversation to have. I think a lot of times, auditors can never rely on internal audit maybe as much as a company would want, but a lot of times there is it's a good place for dialogue to say, well, if the answer is 0, why is it 0? And can it be more than 0? Or what can the company do to help maybe put internal audit in a position to sort of raise that percentage to help drive a more efficient and effective process? So I think these other considerations here are really just kind of reiterating what we've already talked about. You've heard us kind of have some similar themes, whether that's around attributes and aligning there, thinking about completeness and accuracy of the data used. And again, that stems so many of the topics here. So with that, I think we're at 58 minutes. There are a few questions. We apologize. We weren't able to get to all of them. We'll try and follow up with you, via email or again, reach out to your Baker Tilly professional. And Emily, I'm going to turn over to you to close out the webinar.
All right. Thank you so much, John, Weston, Patrick, Thomas, and Jeremy for a great presentation today. As John said, we are right at the top of the hour. So if we didn't have time to answer your questions, we'll be doing our best to follow up with you after the webcast. You can also reach out directly to any of today's presenters. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Please also visit mossadams.com for future webcasts and other resources to help elevate your performance. And thank you all for joining us, and we hope you'll join us again next time.